Dave and I wanted to just give everybody an overview of what reverse mortgages are, how they work, and who they might be a good fit for. So we wanted to just do a 10-minute video here real quick. So some of you don't know, but 2008, I used to originate reverse mortgages for Dave for the company. And market was a little goofy, it went a little sideways. And so I kind of stepped out of that for a while, and I stepped back into the company as in a support role. And that's about the time we all made the checklist. Dave and I put those checklists together, those lovely checklists that you all work off of and you love so much. So we had time well spent doing that. So, but last year, Dave wanted to get back into the reverse mortgage arena. And so he wanted me to see what I could do to help. So I went and got my mortgage license in June of last year. And I've been working on the marketing and the websites ever since. So today we're just going to do a quick overview and let you know what they do. And if you have any questions, let me know. I can always run numbers for people, whatever. But it's going to be a real quick overview, seriously. So if you don't get enough information, let me know. So what a reverse mortgage is, it's actually called a HECM reverse, and that means HECM or home equity conversion mortgage. And these are, let me put my glasses back on. There's two kinds of reverse mortgages. There's a traditional reverse, which is a refi, and a reverse for purchase. Now we're going to go over both of those briefly. So a reverse mortgage is a unique loan that allows senior homeowners access to a portion of the equity that they've built up in their home as tax-free cash. They can repay that loan if they want to, but it is not a required, there's no required repayments there. The guidelines are, and in a reverse refi and a reverse for purchase, the guidelines are the same. So the borrower needs to be 62 and older. It must be their primary residence, which means they have to live there 6 months and 1 day of every year. They still need to be sure to pay their HOA fees, taxes, and insurance, and they always have to be current. And you need to stay on top of the home maintenance so it doesn't deteriorate. Traditional reverse mortgage is kind of like a cash out refi. The four things that determine that are the age of the borrowers, the value of the property, the amount of any outstanding mortgage if they have one, and the current interest rates for reverse mortgages. If you do a reverse refi, if you have a current mortgage, the reverse will pay out the first, whatever mortgage they have that's outstanding, that will be paid first with the proceeds, and then whatever's left is what's available to the homeowner.
And as we're going through this, you guys, if you have questions, you can stop her because there isn't a lot to cover here. So if you have questions, speak up, but go ahead.
Yeah. So who might be a good fit for a reverse mortgage? Well, pretty much any senior homeowner who has considerable equity in their home and wants to stay there, but just needs a little extra cash for whatever, things like home improvements, medical bills, whatever. Some seniors right now are experiencing hardships being on a fixed income, and a reverse can help with that, get rid of that monthly mortgage payment and still have some money left over, probably if they've got equity in their property. So your parents, your grandparents are probably perfect fits too. The reverse for purchase, or the HECM for purchase here, is a loan that allows homeowners to use the equity from the sale of a previous residence to buy their next primary home in one transaction. That's meaning if somebody wants to downsize or upsize, they can use the equity in the home they're living in now and use that equity, bring that equity to closing and do a reverse for purchase. Or it's somebody that has the capacity to purchase the home in cash, but just doesn't want to use all their cash. So the amount of the money that you need for a down payment depends on the age of the youngest borrower. So it could be anywhere between 50 and 70%. Let's see, we were talking yesterday, sometimes in a traditional mortgage, you can put down as little as 3%, but that's not the case in a reverse mortgage. You have to bring in a larger down payment, and then the smaller amount is actually what your reverse mortgage is going to be. Here's an example of a reverse for purchase for two 65-year-old two 65-year-old borrowers. If they're selling their house for $550,000, they're going to net $511,500. So in this scenario, they can buy a $600,000 house and only put down $404,000, still have $105,000 in their pocket. So the, on the right-hand side, you can see it's kind of, you can see that where the monthly down payment would, or the money that's needed for the down payment comes in. So the older you are, the less money you have to come down, you have to come to closing with, sorry. And then in this example, there's two 75-year-old borrowers, and it's the same scenario, but in this scenario, in this case, they're only bringing $367,000 to closing on a $600,000 mortgage. In a reverse world, everybody's life expectancy is 100. So the older you get, the more money you have access to in a refi, or the more money you have to bring to, or the less money you have to bring to closing, because you're going to
The
pay
bigger
that.
the loan. Yeah. The older you are, the bigger the loan you are entitled, you qualify for.
Right, right. So the benefits, again, the benefits are the same on a reverse refi or a reverse for purchase. The monthly loan payments are not required. You don't have to pay it back until you.
Well, you have to pay it back, but you just don't have to make the monthly. You keep saying you don't have to pay it back. It's like, well, yeah, you got to pay it back.
Yes.
There's just no monthly payment.
It's not due until you move from the property permanently or you die. That's when it has to be paid back.
Which is the ultimate permanent move.
That's right. Monthly loans are required. Homeowners are always retained on title, and you can still sell your home anytime you want to. There's no prepayment penalty. You can age in place. The spouse can stay after one dies, and there's a few caveats to that, but I'm not going to confuse you anymore. HUD regulated and insured by FHA. You never owe more than your home is worth. And it's non-recourse loan. So that means the heirs or the estate, after you pass away, they sell your home for what's owed. And if by chance it's upside down, your mortgage insurance premium kicks in and makes the lender whole. So it's a non-recourse. Your Social Security, Medicare benefits are not affected either. So the top misconceptions are with a reverse, I no longer own my home, and that's false. My home must be free and clear to qualify. That's false as well. The lender or the bank can sell my home anytime they want. That's crazy. My heirs won't inherit anything. The bank will take it all. It just depends on what you owe, but I've never seen it go upside down like that on any. The reverse mortgage are only for desperate seniors at a last resort, and that's not true. Retirement planning is becoming more and more for the reverses. The reverses are becoming part of that. Dave had a uncle that we did. My very first reverse was in 2008. It was Dave's uncle, and he's had that loan for 15 years. He just passed away last week, and he still has about $250,000 or $300,000 equity left in the property that he's going to leave to his heirs.
Well, so when we did the loan, I can't remember what the values were. I think he owed over 100 grand. He was in his 70s and he was making monthly payments. He had a tenant living in the basement, and he was still working because he had monthly payments, and he was in his 70s. And it wasn't a big balance, but I think whatever it was, he was able to, I don't think he took any cash out. Did he, Lori? We just did a reverse mortgage, and I don't think he got any extra money.
Yeah, I don't think so.
And so he's lived in that house now all these years, and he just died. There's more equity in the house now than there was when he got the reverse mortgage. Obviously, he benefited from the appreciation in value the last few years. We've had 2 really good years of appreciation, right? But just think about that. Think about how much better his quality of life was. These last 15 years, he got to quit working, and he just got to, like, he's a senior, right? His wife passed away a few years ago, my aunt, and his heirs still have something, he still left something to his 3 kids, right? So, and he lived there all this time. He never became a financial burden to them. And I'm sure he was at some level, because he didn't have any other money. My uncle was, he didn't have anything, but so I'm sure he was just living on his Social Security. But as long as he kept the property taxes and the homeowner's insurance current, he got to live in that house all this time. And now they're going to sell the house, and that's amazing. That's amazing benefit, because in most cases, this guy would have had to sell the house, move out, move into something, and hold on to that money and just pay rent somewhere, and that would have been that, or he would have had to just keep working until he couldn't work anymore. So it's a really cool product for the right situation. And then there's plenty of times where it's not a great idea. But I'm honestly, we are honestly considering doing it ourselves because I'm in the house that I know I want to live in for the rest of my life. I know that. I don't want to go anywhere. I love my home. And so at the end of the day, I'm like, so tell me why I want my mortgage completely paid off. If I could like take $2 or $3 or $4 or $500,000, whatever I can do based on my age and the value of my property, and just go, yeah, I think I'll just get a reverse mortgage and stop making payments. Like, what do I care? I don't care if it's paid off. I don't care. I just want a place to live, and I'll take the rest of my, because otherwise I have to take that money. So if I have a $500,000 balance, I have to take 500 grand of my money after taxes, by the way, to pay off that mortgage. Why would I do that if I don't have to? It just makes a lot of sense for a lot of people. I just think it's a really wise financial planning tool, retirement planning tool, because I could just have an extra $500,000 sitting in a brokerage account earning me, you know, ideally 7, 8, 9, 10% a year, and plus all the income off of the dividends, and or pay off my house, which I don't care if it's paid off. I don't give a shit. Like I just want a place to live. Right. We've all grown up with this idea of I want to pay off my mortgage. And it's like, yeah, okay. I'm not saying don't pay off your mortgage, but I'm saying, what if you didn't have to? What if you could live in a house at least? And if you could only, even if you could only do a $200,000 reverse based on your age and the property value, it's $200,000 you don't have to part with. Right. So you just have to think about what a cool idea. And again, I'll reiterate what I said on the call this morning when I was introducing the idea of this, is that I do not recommend forward loan officers make this part of their business. The only forward loan officers I've ever seen do these, forward being what you sell now, is considered a forward mortgage. This is a reverse mortgage, is guys that don't do very much production. And the reason that's important is because there's a lot to this that's so different than what you sell now. It's completely different software you have to log into. You're not using Encompass. We're not processing them here, at least for now. We may eventually process them here, and then again, it's a very typically long incubation period from lead to closing. And these people a lot of times want you to meet with them at their house and tell you their life story, and I don't have time for that. So
drink a lot.
Yeah, they want you to, and you have to eat the pumpkin pie or the apple pie they put in front of you. And so it's just a different product. It's a different sales cycle. It's all of it's different. So if you refer one of these to Lori and she'll take it from start to finish, you don't have to do anything. You'll get a 1% referral fee. You will get a 1% referral fee based on the funded loan amount. So it's a little like a HELOC. If somebody takes out a $200,000 HELOC, but they only draw 100 at closing, we only get paid revenue on the 100,000, not the 200. Same thing here. So if they do whatever the funded loan amount is at closing, you can get a referral fee for 1% of that loan amount, and you don't have to do anything. And it's probably, like Lori says here, it's probably the last loan your client will do in that home. But it's a great product. I have two. Lori, tell the story about your, let me see, your mom and stepdad in Arkansas, and then your mom when she moved back here after your dad died, after your stepdad died.
My mom did one back in 2008, 2009 when I was doing them originally. And so when her husband passed a few years ago, we sold her house and she came here and we did a reverse for purchase on the house that she was living in. So it was a $350,000 house. She put down $164,000. She had 300. But she didn't want to have to use it all. So she brought in the 165 or 175 or whatever it was. And she's had that loan for 7 years. And, you know, you all know she died last 4 months ago. And we were working on her, getting her house sold and everything. And there's going to be about 300,000 left over when closing. So it's a great product for the right people, like you said. I mean,
well, and the important part of this story is her mother, obviously fixed income, right? She had some assets. Her and her husband had socked away, but she didn't have to the biggest fear that these seniors have when they're in their 70s and their 80s, like, I'm going to outlive my money. And she wants to live in a nice home, but she's afraid she doesn't have to make, because if we had bought the house, she would have had a monthly payment of at least $1,500 a month that she would have been parting with every single month, and that would have been eroding. And then so you just think about the psychology of that. Now she's all alone, and she's gonna So there's a lot to be said for just not having the stress of having to make that monthly payment and letting the equity do the work for you. That's the big thing that most people don't measure is they don't measure like all that money that you're not making payments on stays in your checkbook or gives you the opportunity to have the quality of life that you wanted to have as a senior. You instead of, you know, sending a birthday, that's what they say all the time. Instead of sending a birthday card to your grandkid who lives in another state, you buy a plane ticket and you go see him because because you have that wherewithal. So it's just it can be a really cool product for the right situation for the right person, and you don't have to originate it and you get paid 1%. So definitely a win-win. If you want to sell these, then I'm sorry, I'll just add this and then you can finish. If you want to sell these, then you have to specialize in them and you have to commit to the training, and there's a lot that goes into it. So go ahead, Lori, sorry.
No, the one thing I wanted to just point out real quick is if they do a reverse and they have a considerable amount of money that they can pull out, they can use that money to buy a second home. So they have to leave the property 6 months and 1 day of every year for the reverse mortgage, but then they can use the money for whatever they want. So if they want to buy a second home someplace, they can do that with the money they pull out for the reverse. So just to let you know. So anyway, that's it. If you need these slides or if you want them, let me know. I can certainly send them to you. I know that they're kind of valuable when it comes to the slides for the purchasing part for your borrowers. And I'm working with some Cherry Creek real estate agents in 2 weeks. I'm going to give a similar presentation to them to kind of educate the realtor side of the world. So hopefully we'll get some business rolling for you guys with this. So
cool.
Good for me.
Any questions? All right, guys.
Yeah.
I will share the recording with everybody. Have an awesome day. Thanks for listening. Goodbye.
Thanks. All right. Have a good day.
Thank you.